Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 6th of April. I'm Daniel Lam, your host for the podcast. The US non-farm payroll came on Good Friday, despite the US equities market being shut. It rose by a seasonally adjusted 178,000 during the month, a reversal from the 133,000 decline in February, and better than the Dow Jones consensus estimate at 59,000. The gains were mostly due to healthcare and construction sectors, while there has been job losses on the government side. February's number was revised down by 41,000, while January was revised up by 34,000 to 160,000, putting the 3-month average around 68,000. The unemployment rate went lower to 4.3%, although that was largely due to a sharp reduction in the labor force, around 396,000. The economy is needing to add fewer jobs to keep the broader employment picture stable. Now, the St. Louis Federal Reserve estimated recently that payroll growth of as little as 15,000 could keep the unemployment rate steady. The share of working-age Americans in the labor force fell to 61.9%, its lowest since November 2021. As we discussed earlier, markets were closed for US equities on Friday, while the US 10-year Treasury yield edged higher on Friday's session. So this data is likely to be keeping the Fed on hold for now. The overall growth trend remains weak, but threats of inflation is still lurking in the air. In the near term, headlines from the Middle East will still dominate. We expect risky assets to remain volatile and subject to swings on either side, needing more clarity in the Middle East. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.